Hello traders, how are you? Happy weekend. Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. Today we are preparing for the trading week of 13 to 17 March 2023. After the recent week where the Federal Reserve said, prepare yourself, more hikes are coming and potentially with bigger rates than expected, and with non-farm payrolls results that support that, the market reacts dramatically, and it might be the beginning of a bearish, I would say, spring period to the markets and some increased volatility in the Forex market. In today's video, I would like to share with you three great opportunities I found. That will be the dollar CAD, the SP500, and the pound AUD. But before we do that, I would like to review the previous weekly forecast and the three trading opportunities I shared with you in the last video. In the previous video, that was the pound Canadian buy, euro dollar sell, euro dollar sell, and the Aussie yen sell. These were the three instruments from the last week. If you missed it from the last week, make sure in this very channel you watch this video with the full analysis explaining why did I look to trade them the way I did, and why do I find this trade still greatly developing and potentially to develop much more. So make sure you watch this video. You can also find it right now on the right top corner of this video, and I should point this way, right? On the video you will see the link I'll publish there, direct link. You can watch it or find it in my channel. So let's quickly review them. So the first one we discussed last week was the pound Canadian, and as it was developing this three higher highs, higher low structure, ranging correction was one of the scenarios we followed. And as I explained in the previous week video, if it managed to make one more high, one more low to be higher low in the structure of the range, break out this structure should lead to a massive movement, which happened. And here is the result. So as you can see here, we did complete the three higher highs, ranging correction exactly as anticipated. And we got the higher lows, very important in this case of the range, and the break upside delivered the move all the way to the previous week high. What's next with this pair? Let's go to the real-time chart and see what do we have. So I think it's not over. Simply because the daily is now also breaking its own range, I believe the market still has some more buyers in it, and for me, I would expect to see further continuation upside on the pound Canadian. The second pair from the last week was the euro dollar sell, where we had two key levels, a massive supply zone here and slightly higher, where we anticipated the euro dollar to move all the way down again, at least to retest the previous low and potentially much more. And here is what happened with the euro dollar. As you can see, retested the supply zone. The divergence here, as you can see, higher highs on the chart, lower highs on the histogram of the MACD, completes the bearish divergence, and the market tanks all the way to the previous low and close to the 105 psychological level just before it bounced upside. What is next with this pair? So let's go to the real-time chart, and to be honest, personally, I'm a little bit uncertain at the moment. However, I personally think that the chances here for another final move down, something like that, are bigger than the further bullish direction. I would expect to see these rallies eventually here to end, okay? And around the key resistance and the supply zone, the market to deliver the next sell opportunities, enjoy the second leg before longer term buys. So for me, I'm still after sell the rallies. And the final one was the Aussie yen, where we expected to see in one of the scenarios the break below this range and going down, then some retest and continuation. And as you can see here in this scenario, the move down indeed happened. It was beautiful move of several hundred of points. The break out below the range completes. So for me, the plan remains the same, and any pullback should deliver the opportunity for further continuation down. And now let's go to this week, and what are the three opportunities I have for this week? That would be the dollar Canadian, the S&P, and the pound AUD. Let's start with the dollar Canadian. Analyzing from the higher time frame, I would not be surprised if the dollar Canadian still has the room to go all the way to complete its movement. I plot Fibonacci expansions here, as you can see. Okay, this was for me the first move. Very likely this is the second, and I would expect to see this completing the third. So for me, I would expect it to reach all the way to 61.8 up to 261.8 expansion of these waves. And I would be looking by the dips all the way towards this zone until the market will complete higher highs on the chart versus the lower highs on the MACD. Once and if that happens, that will be a bearish divergence. Then and only then I'll be after sells. Until then, for me, the plan is by the dips. Going down to the daily chart, I personally see these waves developing. They are developing pretty well. Higher highs on the chart, higher highs on any of the indicators. The momentum is so far synchronized. I see the current wave making the three higher highs, higher lows. So pullbacks and further by continuation towards the mentioned zone. That's my plan here. What do you think about dollar Canadian? How far do you believe this one can go? Share with us your thoughts in the comment section below this video. The next one for me, S&P 500, a very interesting opportunity, and here is why. So based on the weekly time frame, we did have a fantastic, let me just here hide this level so they don't take all the screen. So the way I see that, we did have three lower highs, lower lows, which is a classical bearish trending structure, and then A, B, C, D correction. While the market did these higher highs, the indicator, the histogram, starts to make the lower highs. The reason I love this structure is because it manages to hold below this supply area. Very strong sign. And right now, the market is attempting to break this ABCD trend line and managed to close a fantastic equal power, beautiful weekly bearish candle. I think this is a very strong bearish sign. Taking it lower to the daily chart, and we can start to see, once again, let me just hide that, as the market makes the three lower highs, lower lows here to gain momentum. For me, sell the rallies is the plan. Okay. Pretty straightforward, speaking for itself. I would not be surprised if for the longer run, the market will attempt to try and retest the previous low, and ideally, of course, to go and complete another new low. So for me, as long as these highs manage to hold, I would treat them as invalidation zone. The view remains bearish. What is your view on the S&P? Share with us in the comment section below this video. Do you think the bears are going to take another heavy control over the market and make the market tank in the coming spring? I believe so. What do you think? Share in the comment section below. And the final one this week, the pound Australian, very interesting opportunity. After completing the zigzag trending structure, two waves to the upside, two waves to the downside with a bullish divergence, the market completes the beautiful breakout. Besides that, finally during this week, we managed to close the above this previous high, making the three higher highs, higher lows here as a bullish trending structure. Makes me think that the next leg is in development, and by the pullbacks becomes the plan. If I go to the weekly chart to check the analysis based on what is going on there, it simply fits perfectly. If I plot Fibonacci expansion on the developing waves, you will see a very interesting scenario where the 61.8 Fibonacci will meet. Let's plot the Fibonacci retrace on that movement. Okay, and you will see right here as the 61.8 Fibonacci plot next to the 61.8 of the pullback and around the previous massive swing highs. In the zigzag structure, this is usually where the market tends to complete the rally. So in the wave up, we have all these highs as the supply. On the way down, we have this massive supply area, and you will see that it fits all together in the same zone. You can see here the supply, the 61.8 and the supply of the move down. For me, buy the pullbacks towards this zone becomes a classical buy opportunity for the pound Aussie. And if we go to the 4-hour chart, trying to find the structure that could allow that, let's just remove these unnecessary waves. You would see beautiful waves developing here. The first rally, next rally, and the current one that is developing. So I think that we should see something like that here, first of all, until the 4-hour chart eventually will start to develop some further signs. So buy the pullbacks here, with any pullbacks to take place to the previous important demand areas here. Okay, and of course the broken maximum, the broken resistance that now should become a strong support area. From these zones, I would expect the pound Aussie to take all the way to the levels mentioned before. What is your view? Let me know in the comment section below. So thank you very much for watching. I hope you find this video useful and interesting. Feel free to share it with anyone who you feel can benefit by watching it. And I would like to invite you to join us in our trading family, the Home Trader Club, where you will enjoy and get full access to our members area, where you would get the trading courses, all of them. And let me just show it to you here. So you will enjoy here home trading for beginners and advanced, full courses for beginners and advanced. You will enjoy our unique market trend snapshot, all our real-time trading ideas as we publish them, and so much more. So just follow the link below this video. Get your access, join us in our trading family, and hope to see you with us. I wish you and yours all the very best. Thank you for your time watching this video, and I'll see you soon with more. Bye for now, and good successful trading.